This penny stock to buy could spike in 5 months. So in this video, I want to show you one penny stock I am building position in right now. And if the Nigerian stock market pulls back, this is one penny stock I want to add to my portfolio. And this is one penny stock I want to average down. Yes, even though I'm in profit, but then I still think that the stock will still drop to my buy range. And I want to quickly share that stock. In short, I recently recommended that stock in Glofolio. That was last month, June. And then I tagged it one penny stock that could win big in the insurance space. Welcome to Coach Oge. In this particular video, I want to show you how I pick penny stocks. I've talked about penny stocks multiple times, especially stocks that have been ignored, stocks that were cold and suddenly became hot. Remember, I don't chase hot stocks. I focus on cold stocks because they are companies that have not been discovered. They are cold because nobody's talking about them. But the moment they become hot, I dump them and then I move to the next one. So here I want to tell you one penny stock to buy. Now, this would have been a recommendation that is exclusive to members of Glofolio. But then I said, let me give my YouTube channel members access to one of my stock, but not just to give them access, but teach them and guide them on how I pick the stock so that they don't just look at my recommendation as something I do randomly, but how I am intentional and how I follow a system-based model in the Nigerian stock market. Please, before we continue, do not chase any stock in the Nigerian market. A lot of Nigerian stocks have been rallying higher, and now people are shouting Nigerian stock is booming. Be careful. When everybody is talking about the stock, then it's time for you to cut your exposure. It's time for you to reduce your exposure gradually because the dump will not be funny. It may not happen today, it may not happen this week, next month. But if it happens, I tell you, a lot of people will be bummed. So be very careful. So let's quickly look at my disclaimer as usual. The ideas shared in this video are based on my personal research and calculation. Kindly do your due diligence before you invest in this company's stock. And also note that the stock market comes with a lot of risk due to uncertainties. And finally, vet my recommendation based on your risk profile. This recommendation is strictly for trading and not investing, meaning I am looking to capitalize on short-term appreciation and not to hold them for a long time. So let me tell you why I am bullish on this company. Now, this penny stock have been beaten down. That's the first thing. I like it when stocks are beaten down. That's why I told my members today that I am praying for stocks to dump. Because when market is going up like this and stocks are not coming down, then we will not see new recommendation. I love it more when stock dump because that is where our buy opportunity is presented. So this particular penny stock had been beaten down to an important level that suggests selling pressure is over. If you pay attention to these two lines, you will understand how I trade. Number one, I don't chase stocks. Number two, I use demand and supply. So the reason why I've been very successful, the reason why I make money in the market is because I understand demand and supply. I don't buy a stock at the peak of the market. I don't buy a stock when demand is already at the peak. I buy stocks when supply has been exhausted and demand is about to take over. That means I want to buy them when buyers are taking over that stock from sellers, which means that selling pressure has been exhausted. And then I also want to see some level of recovery on that stock. Now, that recovery tells me that buyers are in charge. Now, the recovery does not have any specific percentage. It could be 10%, 15%, 20%, 30%, 40%, even 50% recovery. But as long as downside risk of that stock is still low compared to upside potential, then I am in on that particular stock. So this particular penny stock had been rising by 50% plus from its 2025 low. So it's already up by average of 50% from the 2025 low and 12% in the last 1 month. And guess what? Fundamentals also suggest there's improvements amidst favorable macro trend. That means the current macro trend that we are right now is actually favorable for that company. And if you go by my ETF model, I look for companies that are benefiting from economic events or macro events. I buy companies that are oversold, and then I look for companies that are also fundamentally sound. Once a stock passes this checklist, then it's time for me to buy. So I have no doubt that we could see more gain on this penny stock in months to come. Meaning, when I buy them today, I'm not interested in whether they are top gainer or top loser. What I've done is when I entered, I would hold them. So most times when I buy a stock, the first thing that comes to my mind is I'm going to hold this stock for at least 3 months, 4 months, 5 months before I start thinking on whether to buy or sell, especially if the company has good fundamentals and if the company has been releasing impressive financials, which we will discuss shortly. Then liquidity, because it's penny stock, I don't joke with liquidity too. If you know me very well, yes, a stock may not be liquid for you because you have deep pockets, but it could be liquid for another person. So liquidity is relative. But then I still talk about liquidity in this particular penny stock because I just want to give you an idea of what we do. So many of you, I don't know, it's just so funny that you mention stocks randomly. Even if you are an analyst or a coach, please, you need to learn how to guide your members into buying only liquid stocks. I have seen people recommend illiquid stocks, and just because they are focused on return, just because they want to shout on social media that, oh, my stocks are making money, without looking at liquidity. Liquidity is very key. How easy it is for you to buy and sell that stock makes a lot of sense, matters a lot. Because you don't want to buy a stock and be stuck because one, you cannot sell. Nobody is willing to buy from you. So one thing I look for is liquidity. So this particular stock I want to share with you, they are not suitable, sorry. They are not suitable for long-term or deep pocket investors, sorry. They are not suitable for deep. So if you are going to the market to invest like 10 million, 15 million, 20 million, 30 million, 40 million, maybe this stock may not be for you. Do you understand? It's not a stock you want to trade. But for someone who is looking to invest like, let's say 1 million, 2 million, 3 million, for up to 8 million or 10 on average, then you could probably consider entry on this stock. So this is not a stock for deep pocket investors. However, you don't know, insurance investors can just jump on this stock, especially if they are targeting takeover. So that's a different case entirely. Now, the average traded in the last 1 month is 84.4 million. And I always tell my community or my private subscribers not to invest more than 10%, yes, of the 30-day value. So if the average trade in the last 1 month is 84.4 million, it means if I want to buy the stock, I'm not investing more than 8 million or 10 million. So probably 8 million, 5 million is okay for me to gain exposure in this market. That is how to know the exact amount to invest in the stock. Sometimes some of you are always wondering, how much should I invest in the stock market? How much of the stock should I buy? Learn how to track liquidity of that stock. It will guide you. We do this in Glufolio community. I tell them the average traded on each stock so that they would know what they should be investing in. That way, you don't just pour all your money on that stock and get stock. So that's liquidity for you. And then finally, sectoral influence. This stock is in the finance sector. And if you've been following our monthly webinar, I've been talking about finance, finance, finance. In the finance sector, we have the banking sector, we have the insurance sector, and we have the investment sector. So this particular stock is an insurance stock. It's an insurance stock. And just yesterday, CBN left MPR, which is at 27.5%, signaling caution as inflation slow. So even the inflation has been slow a little bit from their own data, so they still left rates. I think that's the seventh time right now at 27.5%. But for me, I don't usually follow the MBS inflation. Yes, I follow the jollof rice index. This for me is the most reliable way to track inflation. That is it. This is it here. I follow jollof rice index. If you go to business day, you will see the cost of making jollof rice surges to sevenfold in 9 years. If you want to track inflation in Nigeria, follow jollof rice index. Why did I say so? MBS has not been giving us accurate data. And one of the reasons is that they don't track the actual cost of this inflation. CBN don't understand the actual cost of this inflation. I'm here to understand why or how interest rates can help solve transportation or storage problem. Look at the problem causing inflation. Inflation in Nigeria is more of a structural problem. Urban areas face higher costs due to transportation, storage challenges, while insecurity in rural and agricultural zones continue to disrupt supply. These are the reasons Nigerian inflation is stubbornly high. So tell me how the CBN wants to address this with higher rates. That's the problem. So you cannot be trying to put a square peg in a round hole. This is just a summary of the jollof rice index. You can see I just released I think today, July 23rd, cost of making jollof rice surges to 9 months high. And these are the ingredients you need to track inflation in Nigeria. So if these ingredients, or if this particular food is going up and is tied to structural issues like transportation insecurities, then how is it connected to interest rate? That's why I don't use that data at all. So for me, the better way to track inflation is to look at jollof rice index, but that's not what we're here to talk about. All right, so let's now look at this stock. What stocks am I looking at? What stocks are we probably talking about right here? That stock is Sovereign Trust Insurance. Sovereign Trust Insurance. Sovereign Trust Insurance. This is the stock. Sovereign Trust Insurance. Let me expand my chart and tell you more about this particular Sovereign Trust Insurance. You see this insurance stock, I am actually seeing huge upside potential coming very soon. First one, I expect this stock to break out of its all-time high of 1 naira 59 kobo. I'm expecting this stock to break out of all-time high, which is 1 naira 59 kobo, and I'll share my reason. So let's look at the technical reasons why I am bullish on this stock. First one, after reaching a high of 150 kobo, the stock dropped, which is normal, pullback, and then guess what? It dropped to a previous supply zone, now turned demand. What exactly do I mean by that? You can see here, this region, remember, these are key levels, and key level is not an exact price. Key level is a region in the market. So you can see how this stock attempted this zone in 2023, July 2023, pulls back, attempted the zone again in January 2024, pulls back. So that means this zone was a very important level, which is resistance zone. Can you see it right here? I call it key level, which could be support zone or resistance zone. And then the stock pulls back, attempted the zone for the third time. Can you see right here? And then pull back. Now, if you notice, on each pullback, it's been forming what we call higher low. Look at this low here. This low right here is lower than this low right here, and was lower than this low right here. So on each pullback, it's been forming what we call higher low. And higher low is a sign that buyers are in control, especially long-term buyers are in control of the market. And now the fourth touch, what happened? The stock broke out. And then it moved from a low of 25 kobo to reach a high of 1 naira 54 kobo. And this was in 2024. That was a massive delivery in 2024 from 25 kobo to reach a high of 150 kobo. Imagine investing 1 million naira in this kind of stock. So let's see what would have happened. 1 million divided by 0.25. So that would have given you 4 million units of that stock. 1, 2, 3, 1, 2, 3. So 4M, 1, 2, 3, 1, 2, 3 times 1.59. So that would have given you over 6.3. So 1 million naira invested in September 2024 would have given you over 6M in January. That's the power of penny stock. The power of penny stock. Penny stock can give you massive return because number one, the low price is perceived to be cheap. The low price is perceived to be affordable for retail investors, even though being cheap in the stock market is not a function of price. But a lot of people always see penny stock as being cheap, and because of that, they always rush in to buy such stock. The first one, and then look at how the stock broke out, touched 1.959, pulled back, and guess what? The region where the stock tested was a previous resistance. Look at it here. This was a major sell zone. Sell zone means anytime the stock touches this region, it always drop because there's a huge number of sellers waiting for your order to come in, and then that crashes the price. Now, normally we would have expected that stock to pull back right here, but what happened? It broke out. Now, on dumping or a pullback after profit taker stepped in, what happened? The previous zone, which was resistance, now turned support. Can you see how the stock touch this exact region as support? So this is very, very impressive. This is a signal. If you look at this now, it's actually a sign that something is about to happen because one is a key level. So this stock did not reverse from here coincidentally. It was because that region had been tested multiple times in the past. And I always say something, historical data in the stock market is very important. I always look at stock and say, oh, I was not trading in 10 years ago. So what happened 10 years ago doesn't concern me. No, I have traded stocks that historical data as far back as 10, 15 years ago was very pivotal in tracking opportunities in the market. That's where technical analysis comes in. Understanding zone, support zone, price action play, demand and supply is very important. So that means this area that was a supply zone turned demand zone. So this is like a key demand zone right now. And what happened? The stock started reversing back. Now, the low of this region was around 82 kobo, and then started picking up again. Now, it was this recovery that quickly made me to recommend the stock on Glofolio. So in June 2020, look at it, 21st of June, I posted on Glofolio. I said this penny stock will win big in the insurance sector. And what is that penny stock right here? Let me quickly show you that penny stock. Okay, so here is it now. Sorry, I didn't log in then. So this penny stock could win big. So let's open the so this is it here. This penny stock could win big in insurance sector. And what was that penny stock? This is it here, sovereign trust. So let me quickly do a rundown of sovereign trust and what I shared here. I said the insurance sector insurance sector index surged by 123% to reach a high of 718 in 2024, marking an impressive double-digit growth that exceeded market expectation. This sector-wide performance helped some stocks reach new high not seen in years or an all-time high. Since January 2025, I have been tracking the price action of the index for potential buying opportunities as the yield on fixed income assets. We'll talk about this under macro trend. Yield on fixed income assets remain elevated, coupled with increasing premium repricing amid rising risk of protection or protecting Nigerian assets. Now, as I shared this, the insurance sector just broke out of a 3-month high after bouncing off with today's close comfortably above all my wide average. I teach this in my ETC course. This is a strong indication that buyers are mopping up insurance stock, penny stocks to watch. So the insurance sector houses the highest concentration of penny stocks, with most of them classified as dead stock, yes, in the Nigerian stock market. And if you're not careful, you may end up investing in a dying company. To cut the long story short, I bought some units of sovereign trust insurance stock. Technically, the penny stock has the same price action with the NGS insurance index. Now, did you know that? Now, let's stop here and take you look at 2024. Look at what happened in 2024. The stock went from a price of in January, the stock opened at 59 kobo, and then look at where. So this stock was actually one of the top gainers in the insurance subsector. And the chart pattern of this stock is almost similar to that of the NGS insurance. Let me see if I can show you the NGS insurance sector charts. Then we'll compare with, you can see right here, you can see move up, pull back. Now, the insurance subsector itself had broken its previous high. Can you see it's already back to its previous high? You can see we have a big rally, pull back, a test, and then continuation of pattern right here. So you can see right here that this is the insurance sector itself. You can see the massive rally in 2024, pull back, and now beginning again. That this looks like a U sign. Can you see here? Now, insurance subsector had broken its previous high. So let's look at sovereign trust insurance. You can see again, look at the massive run, pullback, but Sovereign Trust is yet to test its previous high. So this stock is actually going slowly or having the same chart pattern. You can see technically this stock has the same price action with the NGS insurance, a clear sign that if the sector continue to attract buying interest, it will benefit from the positive sentiment. Now, Sovereign Trust Insurance closed yesterday at 1.15, a whooping 40% capital gain from 2025 low. So right now it's almost sitting at I think yes, between that range, 40 to 50% gain from its year low. So interestingly, this low, a 2 kobo also doubles at key level. I've explained all this, blah blah blah. But here's the point I'm trying to make right here. So this particular stock had the same price action play as the insurance index. We'll talk about the fundamental shortly, but I'm going somewhere. So here is Sovereign Trust right here. Now you can look at how this stock is actually bouncing off its year low. That year low was a key level that was tested between 2023 to 2024. And now we've seen the stock pick up gradually. So I am extremely bullish on this company. Now, I'm not bullish on just the technical price play, whatever. Let's look at the fundamentals of this company to establish our bullish bias in the market. So let's look at the fundamental of Sovereign Trust. Now, is Sovereign Trust posting? There's a difference between a stock flashing a bullish pattern and the fundamentals supporting it. So I don't want to just look at a stock that is flashing a bullish pattern. I want to be sure that it's fundamental supporting that bullish pattern. And remember, in trading, we invest in growth, while in long-term investing, we buy value. So right now, I am trading the stock and I'm looking for growth in the market. So is Sovereign Trust posting impressive quarterly growth to support my bullish bias? Still a very important question that I need to answer. So let's look at the results. Insurance revenue grew by 32% to 20%, 32% to 20 billion against 15 billion in previous quarter. We are comparing Q1 2024 to Q1 2025, quarter for quarter. Then investment service result also went up 29% to 17 billion from 1.3 billion. You can see right here an indication that the company's core operation is very profitable. I think it should be 1.7, sorry, not this should be 1.7. Let's look at the insurance service results on charts so that we don't look at the wrong figure. Yes, look at it here. It should be 1.7 against 1.3, 29. So 1.7 against 1.3, not 17 billion naira. So that was an error, which I'll correct. Now, investment returns largely tied to the fixed income market also follow the same path by 174% to 623 and 212. Investment return. Now, when you look at investment return of an insurance, they largely tied to fixed deposits, treasury bill, commercial paper, bond, like all the money they invest in fixed income assets. So that return is largely is the largest driver of their investment return. And this is mostly influenced by interest rates. So profit before tax also grew by 35% to reach 1 billion from 748. This should be 748 million. Let me look at the results again. Yes, this should look at it here, 748 million, not for 748 billion. So sorry again. Let's continue with our analysis. And profit after tax surged from 635 million to 871, representing 34% increase. EPS for the quarter also grew by 50% to 6.13. You can see here 6.13 kobo. That's from 4 kobo. Now, EPS trading 12 month print at 18.5 kobo. And if you look at the PE ratio of 6.6, the stock should be fairly valued at 1.17. Now, this is based on Q1 results. Q1 results. Now, I think this penny stock is grossly on the value right now. A solid Q2. So if we see an impressive Q2 result to Q4 earnings, now a solid Q2 or Q4 may deliver an average EPS of around 36 kobo, hence push the price to 1.9, 1.2. So I'm projecting a breakout of that 1.59 to 1.9 or 2 naira on Sovereign Trust. Remember, all this depends on Q2 to Q4 results. So, because by the time they deliver Q2 to Q4 results, then the EPS should be a lot more higher than what we're seeing right here. And based on the PE ratio, then the stock should be trading around 1.9 to 2 naira. That's compared to, we look at what the price is selling right now. So, and I then issued a strong buy order. And then I said, buy Sovereign Trust at 1.1, 111 kobo to 1.15. That's actually my buy range with risk level. So you can see that the fundamentals of the company were very impressive. Q1 showed that the company is also on track to beat its previous year. Look at the numbers, 32% in revenue, investment return 71, 74%, profit before tax 35%, profit after tax 34%, and then EPS almost 50% increase. So you can see that all this confirms that Sovereign Trust Insurance is actually on track. And if you look at their results in 2024, it was also good. Now, let's look at the final one, which is sectoral influence. Remember, I said that CBN left NPR at 27.5%. And one of the major driver of finance stock is interest rates. Interest rates, that's the major driver of finance stock. So if you look at it categorically, you will notice one trend here. Look at investment return. Investment return went from 202 million to 623 million. 202 million to 6.3 million, 174. What happened? That means the company is investing aggressively. Most of the premium they collect as insurance company, where exactly do they invest the money? They invest in fixed income security. That's why higher interest rate is always bullish for insurance stock, especially insurance stock that is actually very profitable. So when you look at the business of sovereign trust, it's already profitable. 0.3 in March 20, sorry, 0.3 in March 2024 to 1.7, which is 29%. So I like it when an insurance company is actually profitable in its core business and then is also able to add to that growth by making more money from investment returns. So when you add all this together, for me, it shows that there's a huge upside coming very soon on sovereign trust insurance. Let's give you an idea of what I do in Glofolio community. You can see that we don't just recommend stock randomly. I carry out detail by detail analysis. This is just a summary of all that I've done in the market. So look at the stock bouncing off key level right here and then picking up. Now combine that with impressive fundamentals. I've already entered this stock around 1.1, and then if the stock drops again down to that region, I will buy more. I will buy more. So this is a stock I am watching for, and I'm very hopeful that in the next 5 months, 6 months, if this company impress the market with good fundamentals, nothing is stopping sovereign trust from breaking out of 1.59 into 1.9 or 2 naira. This is exactly what I do in Bluefolio community. So if you want to see more of this kind of recommendation in the community, you can join us at www.bluefolio.com/subscribe for pick. If you have something trust insurance company in your portfolio right now and you have entered at the same price region I recommended, hold your stock because the next 5 months or 6 months is actually going to be very profitable for us in the market. But please note that due diligence is highly advised on this particular penny stock because penny stock has its own risk. If this is the first time you're watching my video or coming to my channel, kindly hit the subscription button so that when I post an impressive and timely video like this, you'll be among the first to get notified.